Hello everyone, and welcome. Today, we're exploring the top 15 countries with the largest external debt from 1980 to 2026. Over the next 30 minutes, you'll see how global borrowing has changed over nearly 4 decades. External debt plays an important role in the world economy. Countries borrow money to finance infrastructure, support businesses, stabilize their economies, and invest in future growth. Some nations remain at the top because of their massive economies and highly developed financial systems. Others climb the rankings as their economies expand or as they borrow more from international lenders. As you watch this bar chart race, pay close attention to how economic crises, globalization, financial reforms, and major world events influence these rankings. The early 1980s are marked by high inflation, rising interest rates, and economic uncertainty. Many countries borrowed heavily during the previous decade when global interest rates were lower. The United States already ranks among the countries with the highest external debt. As one of the world's largest economies, it has broad access to international financial markets. Several European economies, including the United Kingdom, France, Italy, and Germany, also carry significant external debt because of their advanced banking systems and international trade. During this period, many developing countries begin facing debt challenges as borrowing costs increase. Governments work to balance economic growth with financial stability. International lending becomes an increasingly important part of the global economy. The rankings begin showing a clear divide between advanced economies and developing nations. The second half of the 1980s brings stronger international trade and financial integration. Large economies continue borrowing to finance investment and economic development. The United States remains one of the world's biggest borrowers. European countries continue expanding their financial sectors. Japan rises in global finance thanks to rapid economic growth and its expanding banking industry. International banks become more active across borders, increasing global capital flows. Some Latin American countries experience debt difficulties, leading to economic reforms and negotiations with international lenders. Debt management becomes a major priority for many governments. By the end of the decade, international finance is becoming more connected than ever before. The 1990s begin with major political and economic changes. The end of the Cold War opens new opportunities for international investment and trade. Global financial markets expand rapidly. The United States strengthens its position as the world's largest economy and continues attracting international investment. The United Kingdom develops into one of the world's leading financial centers, increasing cross-border borrowing and lending. Germany experiences major economic changes following reunification. France and Italy remain among Europe's largest economies, with significant international financial activity. Japan continues playing an important role, despite facing economic challenges after the burst of its asset bubble. International borrowing supports business expansion, infrastructure, and financial development. Globalization continues reshaping the world economy. During the second half of the 1990s, global financial markets grow rapidly. Cross-border investment reaches record levels. The United States continues leading global finance. European countries deepen economic cooperation, creating stronger financial connections across the continent. International companies expand operations around the world, increasing demand for global financing. The Asian financial crisis reminds investors that debt carries risks when economies face sudden shocks. Many countries respond by improving banking regulations and strengthening financial oversight. Even with these challenges, international borrowing continues growing. The global economy becomes increasingly interconnected. Large financial centers attract enormous amounts of foreign capital. The early 2000s bring rapid economic expansion. Global trade reaches new highs. International investment continues flowing across borders. The United States remains the largest external debtor, reflecting the size of its economy and financial markets. The UK strengthens its role as one of the world's leading banking centers. France, Germany, Italy, and the Netherlands remain major participants in international finance. Japan continues carrying substantial external debt while maintaining one of the world's largest economies. China's economy grows rapidly, although its external borrowing remains relatively moderate compared to many developed economies. Financial globalization accelerates as businesses and governments access international credit more easily.
This period becomes one of the most important chapters in modern financial history. Before 2008, borrowing continues rising across many advanced economies. Then the global financial crisis changes everything. Banks face severe pressure, financial markets become highly unstable, governments introduce emergency measures to support their economies. Public borrowing increases as countries respond to recession. The United States remains the world's largest external debtor. Several European countries also see debt levels rise during and after the crisis. International organizations coordinate efforts to stabilize the global financial system. The crisis highlights both the benefits and the risks of highly connected financial markets.
As the global economy begins recovering, governments focus on strengthening financial systems. Many countries introduce banking reforms and tighter financial regulations. The United States continues holding the top position due to the scale of its economy. The United Kingdom remains one of the largest international financial hubs. France, Germany, Luxembourg, the Netherlands, and other European financial centers continue playing major roles in global lending and borrowing. Emerging economies become increasingly important in international finance. Global trade resumes growth, supporting economic recovery. International investment remains strong despite ongoing uncertainty. During the late 2010s, global borrowing continues increasing. Low interest rates encourage governments and businesses to access international financing. Financial markets remain deeply interconnected. Then the COVID-19 pandemic creates a new global challenge. Governments borrow heavily to support healthcare systems, businesses, and households. External debt rises in many countries. Despite these increases, large advanced economies continue benefiting from strong credit markets and investor confidence. Technology, digital finance, and international investment continue transforming the global economy.
By 2026, external debt reaches historically high levels in many parts of the world. The United States remains the largest external debtor, reflecting the size of its economy and financial system rather than indicating financial weakness alone. Major European economies continue ranking near the top because they serve as international banking and investment centers. Large economies continue borrowing to finance investment, infrastructure, and economic development. The rankings remind us that external debt is closely linked to globalization, trade, and international finance. Understanding these numbers requires looking beyond the totals to consider economic size, financial stability, and long-term growth. From 1980 to 2026, the world economy has changed dramatically. Global trade expanded. Financial markets became increasingly connected. Economic crises reshaped borrowing patterns. Yet throughout these decades, the largest economies consistently remained among the biggest external borrowers because of their central role in international finance. This bar chart race tells the story of globalization, investment, and the evolution of the modern financial system. Thank you for watching. If you enjoyed this video, please like, subscribe, and share. And let us know which economic ranking you'd like to see next. See you in the next data race.